Hello, this is Guillermo or Proforma 24 with at John Options Trading. How are you, John?
Hey, good. How are you doing, Guillermo?
Doing well. Welcome. This is Options Trading Pilot. Like us, hit that like button, subscribe to us. We are excited. These markets have been absolutely just volatile. Tell me about it, John.
Yeah, they really have. We've been able to, I like two-sided action, and that's been really good for us. Volatility has been creeping up quite a bit, but we're actually long volatility, surprisingly. So we're doing that, and days like today that are down right now, almost 1%, are not bad for us. I look at it as we have long and short positions. We try to stay relatively delta neutral, but we do take some positional trades, and those are working out. At this point, mostly in cash or very few long, I should say. But those positions, the long ones, are getting slaughtered this week. But kind of expected a pullback from the last 2 weeks, 3 weeks of almost constant up move.
Yeah.
So, and we didn't really solve anything. Before the whole Ukraine thing, we still had a lot of issues, and we still have those issues. So, but yeah, we're options trading pilot.com. We do we trade all day long, post our trades out on Discord for our customers.
For entertainment purposes only, right, John?
Of course, I'm entertained all the time from my trading. Like us, share, click click the subscribe button. So what are you looking at these days?
So the brief review is that we had a thin trading range, but it was inside a wider range from yesterday. And what tends to happen is that if we break through the bottoms, as I'm pointing out over here, then we could get really big runs. Earlier, I sent out the alert that 14,419 was a number to look out for. And so we did initiate that trade. We made a profit, but you can see possibly we're hitting the bottom. You can see my trend line that I did. Now I'm using the 4-minute channel. I'm going to switch to the daily channel here pretty soon. But I just thought that it'd be important to be able to watch for that. So let's see, NQ daily. So, we always want to take a broader perspective on things. And so you can see, like, as we're going, I'm thinking that we got to hit this bottom here pretty soon, but we did break that 14,419 number. And what is that number? That number is the low, right? Where was it? It's the low from a previous, I think I kind of just put it right around here. Yeah, right around here is where I did the low right there. So you can see the thin volume range. There's a lot of weakness. So it looked like if it fell through there, it would fall more. So very interesting how it played out. My internet has been up and down. So here we go. 0.79389. Let me clear some of the, wow. Yeah, so my internet is very slow, so I apologize if it's gonna, it should be okay.
Must be raining.
It rained really hard yesterday, so that's kind of like the issue.
Your internet is a direct correlation to the rain.
I mean, where I live, it absolutely is. That's the case. Okay, let me clear some of these drawings here. Clear drawing set.
You must be smart if you have all these drawings.
I look at a lot of different things. Okay, here we go. So you can see on the daily, we're sitting right at that fib line support. And so let's take a deeper look. Notice how my internet is kind of dragging a little bit. We're at that thin range. If we lose the support, we could go all the way down here. You can see it pretty clearly, 13,963. So it's the RSI is going down. We have some negative divergence here. I mean, from what I'm looking at, John, I mean, the risks are high for it to go down. So that's one of those things that you always want to be looking out for, is like, what's your risk level, and your trade should be looking at the downside. Right, John?
Exactly. So, and that's why one of our ways that we trade is we trade small, trade often. So if you trade huge and you're right, you feel like a superstar, but a lot of times in this business, you're a zero or a hero. And if you trade too big and you're wrong, you might be looking for a different type of job.
That's true. That is true. So, John, I had an interesting message from one of our subscribers. He told me that the things that I taught him, he was able to trade his way to buy a house, which I thought it was wonderful. It gives me a warm, fuzzy feeling, man, to be able to do that. He thinks that he doesn't want to gloat and kind of put it out there, but you know, he's really clear with me, and he's like, it's awesome, you know. So it's nice to have subscribers that do that well. You know what I'm saying, John?
Yep. Well, they're proven techniques, and of course, you're not going to win every time, for sure. But
right,
you know, you're trying to increase your odds of winning, and the law of large numbers. Over time, probabilities work. You know, standard deviation works, and reversion to the mean works. And that's what we are working on. Even if we can get a point or two of, you know, bias on our side, we'll take it. And so that's exciting. Yeah, that's real exciting. I've heard people, you know, buying trips and weddings, and now we got a guy buying a house. So, you know, that's good. That's super.
Mm-hmm. And you know what? And it's funny because I kind of take it for granted sometimes, John, that, you know, given these markets that are so volatile, and just to go back to the market, you know, I'm showing here how tough it is to trade these thin ranges. When they go down, they chop. We call this market chop, right? Like really small average daily range, and then just goes back and forth. And so we look for the breaks to make those trades. As you can see, like we are probably having a little recovery here. But what I was trying to say is that we take it for granted that we can make money in the markets, that we can create a second income in order, like consistently, in order for us to live our lives. So it's an interesting way to live, because I don't see it as a detriment, right? Like these markets acting crazy, it's just more opportunity for us, right, John?
Yeah, it is. And what we're finding now is kind of a decoupling of stocks and bonds. And we've talked about this before, but let's say over the last, well, let's call it 30 years, 25, 30 years. Yeah. If the market was down, stock market was down, your bonds were doing okay. And the theory of like a 60-40 or some type of allocation between stocks and bonds generally worked. What we're finding now, though, is with interest rates been pushed down artificially low, now that's starting to get unwound. And you saw the Fed coming out of they're going to be shrinking their balance sheet, which has a knock-on effect on everything. So now the stock market is going down, the bond market is going down, and for the kind of buy and hold investor, there's not a lot of safe havens because the bond market is not saving. And you know, and I know there's been times like this, but it's somewhat of a strange time right now, because with interest rates going up, bonds are really getting hammered.
Yeah, no, that's absolutely true. And so one of the things that I don't think the intent of this little episode today was to really go a little philosophical, but it just hit me that maybe we should mention that, you know, the yield curve inverted. The FOMC is going to be buying up treasuries. They said 95 billion per month, and interest rates are going to be going up at the pace of likely 50 beeps or 0.5% per rate hike. And I think they got 6 more. So the reason why that's important is because we need to be on our toes, right? And how we trade, and like likely that we get a really, really significant downturn. At least the odds are really high. And for us to be able to make money during those times, it's critical. And I know people's lives are difficult. And so I think it behooves you to learn a skill such as this one to at least hedge. Like, let's say you go to the gas pump, John, and you see the prices going up. Well, shouldn't you participate in those prices going up, John?
Well, yeah, you have to, right?
Yeah.
I mean, you have to buy the gas.
Right.
But how are you going to, and I think what you're getting at is how do you offset the rising price of gas? Well,
Right.
go out and buy, well, there's a lot of ways. You can buy crude futures, you can buy USO ETF, you can buy MOO, which is an ETF, but agricultural. So you can participate in inflationary type investments and,
Right.
and avoid other ones like the plague. So there's always somewhere to make money, but you have to be nimble enough to know where that is.
Right. That's exactly right, John. So anyway, I wanted to keep this short. I just want to let our viewers know that we're here. If you have questions, put the comments on here. Visit us at Options Trading Pilot. We're trading very carefully, taking small gains. Whenever I see a big break, then we do trades. It likely looks like we're getting a rejection, even though maybe we haven't broken down again. But I see a long wick on that 4-minute candle, and the 15-minute candle on the SPY. That 444 number is key, so we have to stay above that 444 number in the SPY. So if we do hold, I think we get a nice push up, but right now it's not looking like it. So anyway, John,
yeah,
anything you want to add here?
Well, if you want to look through a couple stocks,
Sure.
I've been watching, but just watching because they've been weak. I'm looking at XLI.
XLI. Oh yeah.
Which is the it's an industrial ETF. Kind of been looking at that a little bit more here. It's kind of bouncing in a range. What I'm looking at is a strangle on that, or maybe even an iron condor, and we can go through what that means at a different day.
Yeah.
But, if I go out right now,
it rejected that fib line on the daily. It still hasn't reached the bottom on the oversold status, but if it veers off on the RSI and it goes back up, it means very bullish. So the number is 99.24 now. It reached a peak of 104.89, and it looks like it didn't like that fib line. So this is a good trade, John. We can expect it to bounce up here and likely to remain in this range. If you sell an iron condor, you could do be super aggressive, right? And do at the minimum 96 and on the top side 107 or so. That would pay us really nicely. Obviously, we use mechanics to deal with that. So
yeah. Well, I was looking at a little wider even for a strangle, like a 90, 107. That's about a 15 delta on the bottom, 11 delta on the top. It's a 74% probability of profit with a P50 of 90%. And it's 43 days to expiration, which is our sweet spot, and that's paying about $115 per contract. So, I don't know if you can see it on your platform, but the IVR, the implied volatility, has gone up from about 18 now to almost 40. So, and that's because of the market going down. So this is, and again, you never know, but this is what we use a lot of times. We'll sell premium because premium is really expensive now. Then we buy it back when it's cheaper. Now, it might get more expensive from here, and then the trade goes against us. But it's one of those things we have to keep. That's part of the mechanics that we trade.
Yeah, that makes sense.
So,
okay.
All right.
What else to look at?
Well, some of the ones I like at some point, SPCE.
Yeah, when things turn around.
I mean, I have to be careful because I really like what the company does.
Yeah.
But I'm not going to buy it just because of that. I need the stock to back that up. So it's down another 5% today. I think it's been as high as 50.
Yeah, 57.51, John.
Okay. So, you know, at some point at it where it is now at, it's around 9. So SPCE,
866. It's really tough to turn down, isn't it?
It is. If we went out to our 45-day, we could sell a 7 put. So we have a 1.5. That would give us what, 15% more downside before we get hit, and that pays $40 a contract at 21 delta, and that has a P50 of 86%. But you know, so these are the types of things that I'm looking at, but not until the bleeding stops.
Right.
Right now it's hitting, it looks like it's hitting an all-time low. Well, no, it's a day range low. It still has another, you know, the 52-week low is still a little bit lower. So, and the same thing with SoFi, SoFi, but being in a business of loaning money.
Yeah, holy cow. Down 12% today, John.
Yeah, they're the, yeah, down to 12%. Yeah, that is a 52-week, so it's probably an all-time low for them. It's probably not a great business to be in. They weren't doing well when interest rates were down, so I don't see how they'll be doing very good when interest rates are going up.
Yeah.
So that could be a lost cause here, but I'd have to do a little more investigation. But that one's down 12%, not earnings. And very, very high volume today. So that one might be going the way of some of these other high flyers.
No, that's for sure. Just trying to draw this trend line here that we can see. Yeah, you can see it's above it, so it may want to go down more.
Yeah, it looks like it has more room to go down, and I don't think there's any support.
Yeah, there isn't. Wow, that's scary.
So, but you know, these also pay. I've done really well in this stock before.
Mm-hmm.
It's just a matter of what kind of risk you want to take.
Yeah.
I mean, but even if you did the 7/6 bull put,
Mm-hmm.
It's still paying. It's a 1 to 3, so you're collecting 1/3 of the width. Still, even at that, and it's a 68% pop. So, you know, maybe it's not worth, I mean, maybe it's not bad taking a little bit of risk here. The downside, if you do it as a spread, you're limiting your risk to the spread minus the premium. So that might not be a bad trade. I'll tell you next week.
Well, that's good, John. Well, you have a rest of the day trading. I think I'm done trading for the day. Made a small profit today. You know, you don't get greedy when you get chopped. You can see the choppiness in the markets now. I just changed the screen. We had a little trend happening, and now we're getting the chop. So you can just see that just going through it. So I think the market is looking for that low to have a nice little bounce. So hopefully we get that bounce for those bulls, people that are bullish. So we'll go from there, John.
All right. Well, good. Good to talk with you.
All right, man. Talk to you later.